What's up, everybody? We got some things to talk about today. I want to make sure everybody can capitalize on this market and make as much money as possible. Let's make sure we can do that. And I'm going to be breaking that down. So let's jam some tunes and let's get it going.
Bitcoin, pump, altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump, altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump, altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump, altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. SEC and its policies rely on whatever Gary thinks. Bitcoin's a flight to quality. I heard that from Larry Fink. Every hour losing purchasing power on foolish outthink. It's not our fault. Blame the cult. It's the political cowards. When it comes to gas, our purchasing power just got cut in half. I sit back and laugh, open my bag, fill it with stacks and sats. Bitcoin, pumping, altcoins, pumping. I've been preparing for this. Can't tell me nothing.
And I believe crypto will play that type of role as a flight to quality. We are hearing from clients around the world.
Bitcoin, pump, altcoins, pumping. I've been preparing for this.
And I believe crypto will play that type of role as
Bitcoin, pump, altcoin, pumping.
we are hearing from clients around the world.
Can't nobody tell me nothing.
Crypto, depending on how you think about it. And I believe crypto will play that type of role as a
Can't
flight
nobody
to
tell me
quality.
nothing. Bitcoin, pump.
We are hearing from clients around the world.
Prepare for this.
What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy stream. My name is Kelly Kellum. Welcome to the show. I am going to focus this episode, this stream, about how you can make sure that you can capitalize on this market because the time is absolutely running out. So before we jump in, I just want to ask each and every one of you, if you want to change your future and you like this type of content, make sure you hit that like button. You hit the subscribe button and you ding the bell because we have a lot to talk about. Jumping right in, looking at the market right now, whenever you're watching this video, whether it's today or 3 months from now, we need to make sure that these strategies, these practices are going to ring true for throughout the entirety of any market cycle or any asset that you're trading, whether it's Bitcoin or altcoins or Ethereum or NVIDIA. In this case, we're talking most specifically about Bitcoin and crypto because this is where the most explosive gains can be made. And it's going to come down to what your strategy is. We can see right now we have a market cap of the crypto market at $2.5 trillion. Not long ago, it was less than half of this. The markets have been ripping. And the question is, what are you doing to capitalize on making money in this market? Whether it's storing capital and hopefully speculatively riding some of this to the upside, or maybe it is, trading. Maybe there's going to be different strategies and it's going to depend on what you want to do. So before we jump in and talk about these different strategies, before we talk about how we can make sure we can exit in profit and capitalize on the most profits possible while still managing our risk, I want you to ask yourself, what's your plan? Do you have a plan? Or do you say, hey, the market, I see other people that have made a lot of money in this market, I'm jumping in. That's not a plan. We need to have a plan and understand roughly on a time basis as well as a strategy basis with tools what our exit plan is so that we can absolutely take advantage of this market. So coming back over here to this screen, let's talk about some of these things we want to talk about. Now, first things first, I just want to show you two portfolios that I run and just show you the difference in how these are organized. I want you to notice this chart right here. Bitcoin comprises 42% of this chart, okay? Ethereum, 16%. So over 50% of this portfolio is in these much larger stacked, basically much larger market cap coins. And then as we go down, we get progressive, we have much smaller allocations as the market caps go down as well. And some of these will change and fluctuate as certain niches pop. but it's about getting that broad exposure while still balancing myself. This is my less risky portfolio. Now, when we come over here and we look at this portfolio, this one's much higher risk, but it still is more heavily weighted in the larger market cap coins. We have 15% Ethereum. This is an entire only altcoin portfolio that I started February 7th. We have 15% Ethereum, 9% Cardano. Near now makes up 8%. This about 2 weeks ago was only like 3% or something, but Near has been running. And that's one of the reasons why I stacked it in here. A layer one competitor that had a much smaller market cap with some newer technology than some of these other layer one projects. And I was expecting this to start pushing up in the rankings on this. And also by doing so, it's taken a larger share of what this portfolio allocation is because it had a smaller market cap. And then as we go down, we get these smaller and smaller coins that also have smaller percentage allocations in this portfolio, balancing my risk. So what we're talking about here is that you don't need, and it's going to depend on what your risk appetite is. Some people might be 81 and they want some exposure to the crypto market. Maybe only Bitcoin's something you need. If somebody's 22 or 30 or even 4, it doesn't matter what your age is. I'll be 40 on Saturday. It's my birthday week, baby. But the point here is you have to understand what your risk appetite is for this market. If you're going to be jumping in and jumping out when you see market movement, say you jump in on a green candle and then the market reverses and you jump out, well, that means you just bought high and sold low. That is not how you make money in this market. Now, before we go any further, I've asked you all this before. We're going to have new people watching this. So I have to ask every single person that's watching this right now, if you are live, throw it in the live chat. Have you ever bought high and sold low? Throw a 1 in chat right now. If you have, and you're watching later, comment down below. I have done it. Yeah, I lost $70,000 on one trade, and I wasn't buying high and selling low, but I was making a stupid decision in the market, being greedy in the market, rather than practice the strategy that I had mastered, which was spot trading. I jumped in and started doing leverage trading with my entire portfolio. This is several years ago. The best lesson I ever learned in this market was doing that, because it made me realize, 1, we always have to have a strategy. 2, we need to adjust our strategy based on what's going on in the market and also what type of strategy we're implementing. If I'm spot trading and absolutely killing it, but then I jump to leverage trading, you have to adjust where your risk is presented in that strategy. So if you have a 2% sort of movement on price, where your stop losses are, if you're spot trading, you don't keep that 2% where your stop loss is going to be on a leverage trade, because you have to multiply the risk factor based on how many X you're taking. So if you're taking 10X, then 0.2% will effectively be a 2% loss if the price moves only 0.2%. So we need to recognize these things. Now, what I'm going to be talking about today is, and by the way, we're going to be doing a lot of TA in the afternoon session today, but in this stream right now, what I want to talk about is every one of you, if you have a portfolio, if you have an app on your computer, or if you have Coinbase, or if you have CoinStats, or if you have a portfolio tracker on CoinMarketCap, whatever it is, just pull it up. You don't need to tell us what it is, but pull it up, look at it. Ask yourself, what are your allocations? What are your goals for the entire asset structure that you have within that portfolio? Because to make millions in this market, and maybe it's not even millions, maybe you're starting with $100, to basically have exponential growth in this market, you have to have a plan of entry and you have to have a plan of exit, because if you're not taking profits along the way in some capacity, even if it's rotating from those microcaps, if you don't have a plan to rotate into stronger assets, to hold it, to endure those profits into the future, then you have no plan. If you don't know what your plan is, like right now, if I ask you right now on a time basis, at what time basis on each asset are you expecting to likely either pull profits, and with that factored in, then what is the percentage growth gain on each one of those assets that you're going to start harvesting profits and rotating it into a longer term asset? Because I love Fetch.ai, but I'm not thinking of that as a 15-year hold. I'm looking at that as like, man, this is a strong narrative. I'm going to harvest some profits out of this into collecting more Bitcoin or more Ethereum and et cetera. So when we're looking at this and we look at a portfolio allocation, this is my altcoin portfolio allocation. Just started this February 7th. We're already up like $20,000 on this. And we just started initially with $14,000. And I've been scaling into it on a weekly basis, adding different positions. And I'm fairly set with where I want to be here. But I just want you to notice, even with my higher risk portfolio, I'm still more heavily weighted in these ecosystem plays: Ethereum, Cardano, Near, AVAX, Link. Link ties together not only the crypto ecosystem, but also ties in real world things outside of this, the Web 2 layer as well as the Web 3 layer. Render, part of that AI play. GRT, indexing the blockchain space, and also has, some AI affiliation. At least it's tied in with that narrative a bit. Fetch.ai, AI play. Okay, SEI, another one of the layer 1 competitors, but has a lot of narrative focus on it. So I have some exposure to that. Matic, they have some huge integrations coming. I expect this will probably balloon into a larger percentage allocation when this coin really starts moving. And then we got Q&T, Quant. Now, what they're addressing is not something I'm entirely excited about, but I'm excited about the narrative in terms of the profits that can be generated from that if this is utilized by sovereign governments, if it's utilized by big corporate integrations of blockchain and services and the software aspect of blockchain, which is what Quant is really focusing on, software as a service. Now we got CeeLo, the phone side of blockchain. They're trying to do a protocol that's going to integrate a lot of things on cell phones and the accessibility, as well as so many great smart contract platforms with that as too. Small allocation. Stacks, I probably am under allocated in this, but at some point you have to realize what your capital exposure to an asset class is, in this case in crypto. And this is only my alt portfolio. Okay, we got 3%. I expect this will balloon as well. HBAR, Arrow, this is a much more speculative play, but it's got strong partnerships. Ondo, strong ties with Coinbase Ventures investments, as well as BlackRock, real world asset tokenization. And that doesn't just mean physical things. That could be financial products. Then CDX, I just added this one, and other is OR&J. I just added these two yesterday, actually. And so what we're doing here, this is an AI play with CDX that is going to basically no coding required to create AI services and AI applications for companies and businesses. I expect this is very undervalued in terms of the price point that it's at right now. Very small market cap, and I expect this will probably see very large growth. But you see, even though I'm taking risk, I'm still heavily balanced in these ecosystem plays that are already proven. Now, these aren't going to, most likely, these sections here right now, these larger allocative plays are probably not going to have as big of explosive gains as some of these, but this is they're still going to get 3x, 5x, some of them 10x, right? But it's basically putting an anchor in the portfolio. Now, when we come back over to this larger portfolio I have, we see this one is the longer term play that still has some, some other exposure, but Bitcoin being the largest player here. Then we have Ethereum. So we have more than 50%. It's about 65% of this portfolio is the two largest assets by market cap in the space. And we have AVAX, another large one, and Cardano, another large one. XRP, much smaller than these other two, but I think this will perform well. But the point here is you can see that we have a pretty wide spread of large players in this longer term portfolio, and some of these altcoins, as we move down the list, some of these altcoins will likely harvest out and get some profits back into Bitcoin. Now, when we're talking about everything that's going on here, I want to give you a little bit of a rundown on how we can know when to basically have a time horizon for when we take some profits. You may think this video is too early, but if you're not thinking about this now, you're going to fail in this market like 90% of the people do. The money, the volatility, and the projections for where this market can go is there. The problem with 99% of people in this market is the strategy and the emotions. They, large in part, have a lack of strategy, and they have far too many emotions. So when we're looking at this, I want to come back looking at the Bitcoin market cycle. Even when we're talking about alts, we have to back it up and look at Bitcoin. We need to be aware that these halving markers here, where the halving has happened in previous cycles, has played a major role, at least on a historical analytical perspective, of post-halving is when we get the most explosive gains, most explosive gains, most explosive gains. So when is that on a time basis? Because we can use this data to then project into the future a period of time in the next however many days, however many months or years, when we should really, at least on a time basis, have some focus. And then we're going to tie this together with some other signals. I'm going to show you right now, here in just a moment, how you can identify, okay, this thing, there's data here that shows we are getting to a point where I need to be considering how to rotate out of this market. This video right here is going to make sure that you can harness the gains in this market so you can change your life. That's what this is about. So we can see these yellow lines, the halvings. We've had 357-day post-halving. This was back in 2013 when we got to the all-time high. Now, 2016 into 2017, we had a little over 500 days all-time high. And then this last halving cycle, where right here, May 11th, 2020, right after the global economic shutdown, we had the halving, and it was just kind of perfect timing for this V-shaped correction, but it was 539 days from the halving to the all-time high. So if we could take that extrapolation and say that the halving is going to be sometime here around April 15th, April 20th, about 539 days, and we can do it, it's going to be plus or minus probably a few weeks here, depending on what goes on with all these ETF flows, that would put us at about October 2025. Now, there's a lot of different theories, and this is why other data is important. There's some theories that we may get a hypercycle. A hypercycle, regardless of any pullbacks, whatever, would see this rising and topping out much more quickly than we have in the past with these periods of time really shortening down with this huge amount of capital flow and explosive excitement coming into the space. Maybe that happens, and I'm going to show you how to figure that out. Maybe this just works its way up. We have a big sell-off, works its way up, and we have a market cycle peak much after this. So we can't just look at time. The time is just one thing that gives us an idea that this is what's happened in the past, but what other data can we look at to really take advantage of this? Because not only Bitcoin, then we can also look at the total too. And this is the last bit I'm going to show you I'm going to show you the signals that can show you when you should really be looking at harvesting a lot of profits out of this. Unless you're looking for a 10-year hold on something, that's going to be determined by you. Now, looking here, okay, this is the total too, the entire crypto market cap minus Bitcoin. So the alt market. We had the halving here, the Bitcoin halving. It shows you these dates. Now, these kind of push a little bit past some of that capital. When Bitcoin tops out, people take profits and they rotate that capital. It's that capital rotation within the market. They rotate the capital into the alts, and you get a somewhat delayed, by a small margin, delayed peak in the altcoin markets. So this one had 546 days back here in 2017. This was only delayed by about a week and a half. And then back here in July 20, the 2020 into 2021 top, we see we had a bit of a double top here, much like we saw in Bitcoin, but to the peak was about 574 days. So a little bit longer than we see here at 539. So there's a little bit of a difference there. Now, you don't need the exact day. You do not need to catch the exact top. If you are trying to catch the exact top, that means you're going to be waiting as the price gets up into the point to once it hits that exact top, you can't know until later. And the market will reverse so fast, and your greed will keep you in the market longer than you want to be, because you see it hit all-time top high. You're expecting the retrace is just that, only a retrace. And then when it never goes back up, it goes lower and lower. And a lot of people get lost in this feeling of, no, it's going to go higher, only for the market, the profits that they could have taken to evaporate more and more, and to the point that you become despondent, and then you're like grudge holding, because you're like, no, it's going to go back up. And a lot of times people end up holding to a point where they get all the way down to the break-even point at which they got in, and they spend all that time, the energy and stress, only to make no money. So it becomes a cost on you rather than a benefit. So be aware of these roughly, let's say 500 days, this 500-day sort of metric post Bitcoin halving. You should already for 100 days before that, be realizing where you're at in the market cycle. Because when you look at the halving And we've looked at this a number of different times, but I'm going to show you a different way to look at this. When you look at the halving, yes, we get the explosive gains after, but all of this movement up and down is just chopping people out. And there's a lot of people that get in on these tops. And they get out down here and they get back in here because they think it's going to go back up. And they get out here and they get back in here. Do not be this person. If you want to make money in this market, learn from the mistakes of all of us humans before you that have made good decisions and made bad decisions. I'm here to share this with you. So if you like that, I'm about to give you some signals. I want to see every single one of you right now hit that like button, hit that subscribe button, and join us in this community because we've got a wonderful community and we would love to have you in it. So let's talk about what these signals are because we are coming up on that marker right here, this line that is representative of basically coming back full circle to this point right here when those explosive gains are going to happen. So let's know what our exit strategy is before this happens, because if you're not looking at it now, then when the market's already moving, you are going to be trapped in your emotions, and your emotions are the death of profits. Let me come back over to this right now. Your emotions are the death of profits. You're going to fail in this market. You're going to fail in Bitcoin and crypto if you do not have your emotions under control. And that's just a matter of fact. So follow us for more so we can teach you how to make sure that you capitalize profits and not just capitalize losses, donating your money to the game. Now, are you ready for the signals? I think we're ready for the signals. All righty, so let's look at it. We talked about the time. The time is a big factor, 500 days. It's been as short as 357 days. Now, remember, I talked about a potential different cycle here because we have all this capital coming in and so much mainstream media news awareness, but we need all that mainstream media news awareness now because the market caps of Bitcoin and a lot of the top altcoins, there's huge amount of money in here. So it's like trying to turn a cruise ship. You need more capital inroads to drive it to any sort of levels like people are talking, even 120,000. Some people are saying 250. Some people are saying 500. Who cares what the projections are? What is your strategy to make sure that your portfolio projections can be realized? Now, we're talking about the time here. We came back here a second ago and I was talking about making sure you have the exposure to the different types of different niches within the market and in a balanced way, and understanding if you do want to make a lot of money, and you're starting with less, then yes, you do need to have more exposure to smaller cap coins. But know that if you're doing that, you're also exposing yourself for a higher potential, higher risk matrix to potentially not make it. Yes, you can make a lot more money, but there's also a higher likelihood that something happens within one of those projects because they're not tested. They don't have a huge community that's endeavored over a period of time. Now, is there explosive gains? We saw in the last cycle. Some of the biggest gainers in the last bull run were coins that launched plus or minus a few months of the halving. Solana, AVAX, Matic. Now, that's going to be the same case now with some of these newer projects that are launching, some of these newer protocols that are coming to light, especially with the advance in the awareness of what may be slow or clunky or, could have room for improvement. There's a natural evolution to the space. And with those coins, you can make huge gains, but you're also exposing yourself to a little bit of a lottery system. So I really beg you, if you want to endure through this market, get some exposure to those risky plays, but do not do it at the expense of you being able to win in this market. Balance your portfolio. If you have $1,000, you don't need to have 30 coins. Limit it down to maybe 7 coins or something like that at a max, where you're having some higher market cap coins and then a few smaller market cap coins. And you will notice that these smaller market cap coins, if one of them does hit, it will balloon from 1% to 50% of your portfolio. And if that's the case and you've not captured any of that profit and put it into something that has a more enduring sustainability like Ethereum or Bitcoin or something like that, then the high likelihood is going to be, if you don't take profits as you see huge gains, there's a super high likelihood that you're going to see your profits that you take screenshots of. You're going to be so proud. only to have it the next day, the next week, the next month, completely evaporate back to the place that you bought at or even below. You're going to only have been rich on paper and never in your accounts. And I want you rich in your accounts, not just, hey, one time my coin was up to this and had I taken profits. No, we're going to take some damn profits along the way. And this is how right here. So what do? Well, I'm going to show you some metrics. And even though we're talking about alts, we have to focus on some metrics for Bitcoin because it's going to give us clues as to where we are at in the market cycle and what the behavior of those big players are. So here we go. And I'm going to share some free services. So you don't need to go sign up for Glassnode. You don't need to, I share that stuff with you here on BitLab Academy. I share it with you all in the Discord. We share you the liquidation levels and the higher ticket data that we get, but there's free tools that you can utilize and they're right here. Let's go ahead and, okay, first things first, the Fear and Greed Index right here on CoinGlass. If you don't know how to find it, I guarantee every single one of you has a computer because you're watching this. And let's remember to challenge ourselves. If we don't know something, there's a website that every single one of you all can use. It's called Google. You type in Fear and Greed Index. Let's go ahead and do it right now. Fear and Greed Index. Okay, let's see if there's anything. Oh, well, there's all kind of options. So that's the first step. And I don't mean to be condescending here, but let's remind ourselves we have the capacity to access the most widely sourced availability of data than we've ever had in human history. If you don't know something, Google it. So CoinGlass is a great one that I like to use for that data. And we can see right here, let's refresh this page from yesterday because it was up at 90. It dropped to 75. Now it's back up here at 82. So let's just keep a general awareness as to what's going on this on a general basis. Now, here's where it gets fun. And this is a free site, by the way. Here's where it gets fun. We come over here to lookintobitcoin.com, free website, lookintobitcoin.com. And by the way, on in the BitLab Academy, I have a whole course on on-chain data right here. And you can sign up here at the top, enroll now. If you enroll through this, you get access to the courses and all the Discord stuff. But when we're talking about this chart right here, this is the value days destroyed. Regardless of if you understand what this means, regardless of if you understand what any chart means, here's the trick. Look at the chart. What data is present? Where's there correlations in the data with certain types of behavior in the price action? We see the Bitcoin price here. Okay, we have a bull market up to 20,000. We came down here to 3,500, 3,100, up to 14,000. So let's look at the price action and let's look at what this metric down, whatever this VDD is. You don't have to know what it is all the time. You can start educating yourself by trying to draw correlations that are repetitive over time. And in this case, we can see this VDD metric spikes really high and also gets red here near these market cycle peaks. In this case, this spiked really high and got red before the peak. Okay. In this case right here, it spiked again and got red right at the peak. Okay. Right here, spiked red a little bit before the top. But what this is showing us, and by the way, here's the deal. We use our ambitious curiosity, which is the only way anybody masters everything. Be ambitiously curious. If you scroll down, there's a complete description about all this. And I also talk about this specific chart in the BitLab Academy on-chain data course. But what this is showing is coins that have been held. If you have one Bitcoin and you hold it for 5 days, that's 5 coin days. If you've held that coin for 100 days, that's 100 coin days. And so when this metric is spiking, it's showing a lot more Bitcoin is moving. And in a substantial portion of that Bitcoin that's moving is coins that have been held for some time because you have a lot of coin days. You have a lot of coins that have been held that have moved as well as coins that are newly held. But this spikes predominantly because there's people that are taking profits. They're selling. And remember, if you're taking profits, you're selling it to somebody that's buying. So what this is telling us is as this is moving up, you don't need a technical degree to understand this. When you see large spikes, it means a lot of older coins and a lot of coins in general are moving hands. And so we want to watch for this as this gets much higher. We know we want to look for, several hundred days after the halving to identify where that peak may be. But then we also come to our data here on chain. And I want to follow what the whales are doing. I want to be aware that the big money has gotten out. And if they've gotten out, they're selling to new money that's coming in. They're selling to retail. They're selling to people that have paper mache hands. They're excited because they're like, oh my God, Bitcoin's at 20,000. Yeah, now I should get in. Even though every one of you and every one of myself and everybody in the crypto market's been telling their friends and family back here, and we were freaking idiots. No, Bitcoin's a scam. But then they want to buy up here, and that's what happens. And they get eaten alive, and then they think it's a scam again until this happens. It happens on a regular basis, and we see higher highs each step of the way. But what I want you to do is use some of this data. And I'm sharing you these free signals that you can find yourself as well. And I'll be sharing them on a daily basis, keeping people updated here on the BitLab stream. But when big money coins that have been held for a long period of time are moving, changed hands, making it top heavy because now it's retail buyers, I'm looking for, and we're going to get to the final at the very end of this video in a few minutes. I'm going to show you what the trigger is. This is setting the context for maybe we're getting too hot, maybe a peak is coming. So we're using this metric right here, and it's on lookintobitcoin.com. And you just, when you come up here to charts, if you don't see it, you can click on, because it used to be, come here. It used to be right in here, but I don't see it anymore. They moved it from here. But what you can do is just click on this chart area, just like this, and just type in search value. There it is, value days destroyed, boom. Great. This is how you find that one. This is one of those things that we're really gonna start looking at when we get closer, 100 days after the halving, and we'll be tracking this regularly. Then another one right here is the MVRV Z-score. This shows you the market value to the realized value, and the Z-score, this is measuring on a basically exponential basis the distance between the price, actual price traded on exchange, and this blue line, which is the realized value or the realized price. The average of every coin in circulation the last time it moved. Now, why would this be below the price when price is moving up? Because there's some coins that were bought 7 years ago that price point was the last time that coin moved. And that is averaged in with all those coins that have traded hands today as well. So this is an excellent metric to really look at to capture especially great opportunities for buying, because when price goes below this, look at this. Excellent opportunity to buy. Look at this. Excellent opportunity to buy. Look at this. Excellent opportunity to buy. Incredible opportunity to buy. This just tapped it. And this was the FTX collapse right here. Excellent opportunity to buy. There's so many different technical mechanisms that we can use when we're analyzing stuff that we complicate the living hell out of this market. You can be a beginner. Use these free tools. Do nothing else. Say, I don't know when to buy. Pull up the MVRV Z-score here on lookintobitcoin.com. When the price goes below it, start DCAing in heavily. You could be DCAing into a bank account, not into the market. You can DCA into stable coins or just a bank account you know you're going to use for crypto, and wait until this price action goes down below this below this realized price, and then schedule 2 months or something like that to every week DCA that money in, however much you accumulated. When it's all this period right here, I'm not DCAing in on a downtrend, but I'm DCAing into a bank account so then I can start deploying the capital when it's the most opportune time that is shown historically proven and consistent on this metric. Now, how do you know when to get out? Well, when you have these spreads where the price action is deviated very far away from this realized price level, you get these large peaks, because this is an exponential measurement of the spread between the price and the realized price. So you see, when this is going very high up, maybe not all the way through the red, maybe only tapping in here, we're going to start paying attention when this gets really high as a potential top coming in to the market. And again, scroll down, much more in-depth detail. And I talk about this also in the BitLab Academy on-chain analysis course. Now, coming back over to where we are, that's MVRV Z-score. Now we have the RHODL, RHODL. Now, what we're seeing on this one is this dynamic balance. Remember, we were talking about the market potentially sometimes getting top heavy. What I'm referring to is when you have people that have some sort of time horizon view in the market, whether it's 1 year, 5 years, 10 years, and other people that are just jumping in and out for speculation. So this is balancing that coins held or moved within the last week versus the coins that are held for, the number of coins that have been held for 1 to 2 years or more. So this is a metric balancing. Is it very strong because there's more long-term holders, or is it getting very weak because there's more short-term holders? And as you can see, when the price action reaches a top, the long-term holders have given the majority of their supply, they've taken profits, and now short-term holders are holding. Now, what happens? The market moves down and it shakes out the short-term holders, and more longer-term holders buy until we get now a balance where it's more strength in the market, because now it's, all these short-term holders have sold, they've capitulated because it's a scam. But then the long-term holders go, you silly goose, I'm buying and I'm going to now hold. I'm going to sell back to you at the next top. So this is very low. And then we get strong movement to the upside. This is high. Short-term holders are high. Imbalance in the market. Market moves down. Happens time and time again. Now, this one did not get all the way up into this red. Remember, all of these are metric suggestions about, they're not absolutes. In this case, this is one of the reasons why in the last cycle, a lot of people think that we got truncated. The bull market was cut short. It should have gone higher. Well, this is where the Chinese mining ban occurred. And basically, 30% of the mining power on the network was shut down because of that Chinese mining ban. And, because of that, a lot of Bitcoin was also dumped on the market, and there was fear in the market. So this is why we had this weird sort of double top, and this didn't get all the way up into this zone. But we're kind of getting pretty high now. I expect, just because of my feelings about what happened in the last cycle, I expect this will actually go beyond this time and actually touch up into the red, but we still have a lot of room to go. But we can pay attention to this metric as well. Remember, when we are trading actively on a 5-minute, 10-minute, 1 hour, 1 day, I don't enter trades or exit trades unless I use the stoplight action protocol, which basically for me makes me want to look at the context, the landscape, a confirming signal, a supporting signal, and a trigger signal. So I'm seeing something setting up, and I try to find multiple different data points that support that thesis, and also look for something that may disprove what I'm expecting in the market. So when we're looking at this, we're not just looking at value days. We're also looking at the MVRV Z-score. And then now we can look at the balance, more long-term or more short-term holders. And you can see just on this metric alone, FTX collapsed. Look, this was showing that we're coming right down into a great buy zone. So now let's look at this next one. Very easy to determine the type of trend you're in. Short-term holder realized price. Remember, before we talked about realized price, here we're talking about the realized price of every coin in circulation, but we're filtering it down just to the coins that moved within the last hour to 155 days. So all the coins that have been moving around, that they're not locked in somebody's safe, right? This is stuff that's like highly liquid. There's not a lot of strength in it. It could be professional traders. It could be retail that just jumped in, but it's coins that have been moving. And when coins have been held for less than 155 days, they have an astronomically much higher likelihood to be exposed to volatility and capitulate on any price movement. Once coins have been held longer than 155 days, there's a cliff of a drop off of a likelihood of those coins changing hands because of some small movement in price. So what we can see on this chart, we can even just zoom this in a little bit. Let me see. Can I? Oh, we can't do it on this one. But you can see this yellow line, and then you have the black line. The yellow line is that average of all the short-term held coins. When we are in a bull trend, we tend to be above this line and come down and support it. Bounce, 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 bounce all the way up. When we are in a bear trend, you see we lost it here from the blow off top at 19, came down, and then came up into the realized price and sold off. We're selling off each time we come into that zone. Again, we're back above it, bounce. We kind of had a deviation there, which was a little scary on an on-chain analytical level when we were looking at all the markets, which is why you use multiple data points. But now we're watching this bounce on this, and I expect There's another chart here. If we look at this site's not free, but I share this with you guys on a daily basis. Short-term holder cost basis. Short-term holder. Where is it at? Here we go. This was that area where we dipped below. A little bit of rejection, then finally just launched to the upside. We can also see it down here. It's the same metric we just saw on Look Into Bitcoin, but we can see when we're above it, we're below it this whole bear market until we eventually break above it and then support all the way up. So this is a great metric to determine. Maybe you only want one metric and you want to keep it simple, and I don't recommend that, but use at least 3 metrics, okay? But say like right here, oh, it's at 20,000. It's dipping, but I think it's going to go higher. If this price comes up and rejects, that's your exit. If you're only using one signal, exit. Same thing right here. Look, 64,000, we lost it. Yeah, we had this sort of move here where you could have gotten back in, it would have bounced, gone up, and you would have got back out over here. So you would have effectively been about net even on this. And this was that shakeout that we were just talking about, which is, again, why we use multiple metrics. And if you really want to simplify it, you come over here to colintalkscrypto.com/CBBI. I'm going to type this in. I'm just going to share this in the, in the live chat. colintalkscrypto.com/CBBI. What is this? The bull run basically index, Bitcoin bull run index. And what this does, this aggregates, I think 10 or 11 different on-chain data charts. High cycle top, the realized and net unrealized and realized profit and loss ratios, the RHODL we just talked about, the Puel multiple. Puel multiple has to do with mining profitability. 2-year moving averages, Bitcoin Trollololo trend line, the MVRV Z-score, reserve risk. I love this chart as well. And the Woobull top cap and CVDD, coin value days destroyed. But forget all that. Simplify it. Let's do it like kids with the coloring book. Okay. What is this showing us? If this is really high, we're at a market cycle top. You see this? Down. Really high, market cycle top. Really high, market cycle top with a little bit of a, fake out again to the upside that then crashed. Also, really low, market cycle bottom. So you could theoretically just use this for the crypto market cycles and look at CBBI and these value days destroyed, or this MVRV Z-score, or RHODL, confirming your signals. And in this case, we're actually quite high for where we're at right now, which is understandable, which is also why there's some people debating we're going to break back down to 30 and other people thinking we're about to go straight to 300,000 because we're in a different structure in the market. So what we're looking for, remember, back to this, 500 days, a little under 400 days. And then here's a 500-day projection plus, which is October 2025. Well, if we look at the CBBI, there's a little bit of a concern here because look at how high we are in terms of how overheated potentially are we at this point. We're higher here than we were when we had this huge 70% sell-off pre-halving last cycle, 3,100 up to nearly 14,000. This was only at this level when we got the sell-off. Look how high we are here. There are metrics right now that suggest we could still have a substantial pullback. But there's so much capital inflow, people are now starting to think, man, what's going to happen? So I'm leaving myself out, especially in that altcoin portfolio I've shared with y'all. I'm focusing on more positions that I'm holding throughout 2024 into 2025. And we're seeing that although we're high here, I'm going to look for some sort of pullback and see how much this resets. But I'm going to be very concerned once we get over this 80 mark, and we're right there, especially once we get over this 90 mark, because this has marked all the highs over 90. Once we get over 90, I'm going to see where we're at on this market cycle, where we're at post-halving, if we're even at post-halving already when this gets up here. But it's a cause of concern for some profit taking and strategy once we get this over 90. Now, there's a couple other things we can do. So here's Bitcoin. We talked about the time. We talked about some of those signals, but what else can we do? Well, we understand we have time. We have this. Okay. The on-chain data is starting to show. We have the short-term holders rising very high, not precipitously, but the short-term holders, the long-term holders have distributed, sold, taken profits into these long-term holders. Okay, now we're on the chart. What do we do? Well, let's go ahead. Let's go with the basics. We're going to look at just the basics here. Sorry. I do that all the time. We're going to look at MACD, RSI. We could actually even take off the stochastics here and just keep it very simple. We keep the money flow here down here, but I just want to show you something. We're on the weekly chart. I'm looking at the MACD. I'm not looking at the price. I'm just, okay, right there, option V, there we go. This was the last one, option V. This is the one, option V. So we're trying to figure out when to sell when you have market movement. So I'm looking here a little bit macro, because if you do this on a daily or 4 hour, you're gonna be in and out on this signal alone. So we're looking at the macro. These vertical lines that we have are when the MACD crossed bearish. You see that right here? Meaning that momentum expansion to the upside, which is why these green bars, these measurements, by the way, just so you all know, there's two lines here, a faster moving average and a slower moving average. These bars, you don't even need to look at these lines. These bars are a measurement of the width between these two lines. You see right here how it's very close and how small this is. And then as soon as this starts expanding, see how this goes up? When they are contracting again, the color goes light. When they're expanding again, the color is dark. And then right here, you can tell right here without even looking at the lines that the lines are starting to close in on each other, because this goes from dark green to light green. Similarly with the red, expanding bearish, contracting back towards the zero line, back towards bullish. See how these are getting closer right here? This is getting much smaller. So you don't need to look at the lines. It's much easier just to look at these things. And we can see as this is contracting down, right at this point that this crosses, what does this show on the price action? Man, you would have caught this top perfectly. You would have lost, a few percentage, 15% or something here. But if you're really trying to identify what's going on, is this rolling over? Well, there's a lot of signs that it was. Now, the question is going to be in this next cycle, are we going to get something like this blow off top, or are we going to get something like this rounding top? We have to be prepared for either scenario. Now, in this case right here, let's look at this one, because this is a blow off top. This is where the MACD crossed bearish. We see right here, boom. Now this price action went from that point, dang it, let me get a measurement tool. From that point right there down, that's like a 30%, about a 30% loss. But I would rather get out at $13,800 than not. And in this case, remember all the groundwork. This MVRV Z-score was way high before that. So maybe you're taking the MACD as a signal. Maybe you're taking the MVRVZ and the RHODL. See here how this is really high. At this point, once this is tapping into this red, I would start DCAing out. Similarly with the CBBI, once this gets up here above 90, which was right here, we can see where the price was, $9,000, and then it's up to 10,000, and then it's up to 12,000, all the way up to 19. You would be DCAing out into that. And some people say, but you didn't capture maximum profits. Well, if we come over here, I'm going to pull up a new one. Look into Bitcoin. We go to charts, so we can go to addresses. Let's go right here. Addresses with greater than 10,000 Bitcoin. Notice something here. Addresses with a balance of, why is this showing? This is not the right line. Let's go to, I'm going to pull up on Glassnode because I know how to pull this one up more directly. By the way, if you guys are enjoying this content, I'm trying to give you some macro tools that you can really utilize to maximize your gains in this coming. And we're in the bull market, but we're going to get shakes along the way. I do not want you to get shaken out, but I also want you to be looking at how you can take this capital and really, again, change your life. Not get caught in the trap of your emotions. So coming here, let's go to addresses with 1,000 Bitcoin or more. So this is, again, one of those metrics for smart money. Now look at this. If we zoom in right here. So this was the price action coming up to $64,000. At this point right here, this orange line that's diminishing, this is a wallet with more than 1,000 Bitcoin. They're reducing. They're taking profits. Now, you want to see the bigger players, the ultra wealthy, you can look at the addresses with over 10,000, and they started taking profits right here. And I want you to notice something. Look at this, this little box of information right next to the mouse. You see the addresses with balances, and you also see the price. So look at this peak right here and the number of, what's going on? The number of the peak of the number of wallets that had over 10,000. Look at the price, 17,800. That's right at about, regionally, right about where the previous all-time high was. And then as this, essentially, let's zoom out. See, this is the all-time high. You see how this comes across right here? This little area. At this point up, they're immediately starting to DCA out. They're starting to layer out. And what does that mean? If they're layering out, this is a lot of short-term holders, retail buying the hype into this, which is why we also get this top-heavy market that then ultimately collapses. So we have the MACD. We have these different on-chain data charts that are showing us the balance of long-term and short-term holders, where the price is at in relationship to the market value to the realized value, the short-term holder cost basis. And watch back through this video. Watch back through this video. Share it with people so you don't get caught in the trap. And we have the MACD sort of crossing here. The on-chain data was already signifying to us, hey, we might be getting a little hot. And then when we're looking at this right here, okay, we're about to break this previous all-time high. What does it look like in relationship to the MACD? So the MACD, you see how this was kind of contracting in this move right here, but now it's having a very, very wide expansion. You see these are expanding, and this is getting taller and taller. We're going to want to watch over the next period of time, and I'm not going to be shaken out by having some sort of move within here, even if we get, because recognize, in this case right here, this is right at the halving, we had roughly right here, this would be about a 44% pullback. Yeah, say 43% pullback coming through the halving. Now in this previous cycle, we had a push up and a sort of consolidation into the halving and going. Now, this is something I want you to pay attention to. I think it's very likely we get something like this in this bull market cycle. There's gonna be a lot of people that get eaten alive, and it's not the worst thing in the world to take profits here. Have this sell off a bit and continue. But there's going to be some people that are going to be, once they sell out here, have this drop, and this keeps going, those same people that were already in profit are going to be buying somewhere here, thinking it's going even higher to have the market price reverse, and they end up underwater. So fix your strategy, be adaptable, but understand what you want to do, and then don't change that where you end up in profit, and then a month later you end up underwater. Because there's very strong likelihood we get something like this with all these new capital inroads, because essentially what could happen is we can get this hypercycle type of movement on this price action post-halving, have a bit of a sell-off, and then have the huge announcement from something like Amazon or Walmart, or there's so many different things that could happen that could, or government, that then ends up rocketing the awareness and the positive sentiment in this, that then gives us that secondary true all-time high in this next cycle. Because it could be realistically, if we come over here, we come to terminal price. Terminal price suggests, and I don't think this is going to be the case, but the terminal price is only at about $125,000. Now, we have had some deviations above this each time, but there is a scenario, with exciting as everything is, that we don't get 180,000 Bitcoin or a 300 in this particular cycle. There could be a lot of profit taking once we get from 100 and 120, and we could also rocket up to 180, which is why we can look to the context of what's happening in these signals so that we can make sure that we're taking advantage of the market. Now, we've talked a little bit about these signals, about when to exit, and remember that we have Bitcoin leading the way in terms of the time horizon and the altcoins being slightly after. So you're going to want to really look at the type of coins that you have in your portfolio, how you have it addressed in terms of holding secure asset into the future, right? But making sure you're getting exposure to those various different altcoins, because I started this I started this February 7th. Spot only. No lever, no trading on this at all. Just spot. Ethereum is up 48%. Cardano is up 51%. Near's up 80%. We're starting to get to the point where the entries for the explosive gains to really dominate in this market is soon coming to a close. I don't think we're closed yet, but every day that goes on, you're getting a diminished possibility of harvesting huge gains. Now, yes, maybe you're trying to play catch up. Don't. Figure out what niches interest you between Bitcoin and Ethereum, layer one ecosystems, as well as think about the AI play. Think also about AI has been running a hell of a lot. AI has been running like a mofo. Render and Fetch AI, AGIX, Chlor.ai. There's a huge conference coming up. You have to be aware of that. That could mark a local peak that then AI doesn't perform as well for 6 or 8 months after that. So you don't want to lump all your eggs in one basket. So ask yourself right now, when you're looking at these markets, when you're looking at your portfolio right now, ask yourself what type of exposure you have. Is it all singularly focused on one asset? And if it's Bitcoin, fine. But if it's a micro cap, not fine. And notice, when we're looking at these different assets, for instance, Filecoin's a good one. I like Filecoin. But people look at this, and you need to do this on all your assets. Every one of you, this is your homework. My computer is glitching there for a little bit. Sorry about that. When you're looking at this and you come to all, you say, oh my God, I can't wait for this to happen. All of us have done this. I did this the other day, and I was like, oh, let me look at some more data. When you're looking at this at $9, you're like, oh man, I can't wait. This is going to go up to $179. Well, come over here to market cap and realize there's still a lot of growth to be made in terms of market cap. But looking at this in terms of market cap gives you a better idea of the possibility of growth in these assets. Now, some will blow this out of the water, but majority, there's been a lot of the altcoins that are out right now, especially the ones that have been around since last cycle. This is important, most important for them. There's been emissions over time, AKA there's been inflation in the total number of coins for each one of those assets. There's been inflation over time. And so because there's more coins, it's going to take less it's going to take less movement to get the price to the previous, to the market cap of the previous cycle. So that being said, looking at price, this is at $9, okay? The previous top was up here at 180. Was that 20x? Something like that, 10x? Yeah, 20x. If we look at it in terms of market cap, this is currently at 5 billion. The previous market cap was basically 11, so that's a 2.5x. So there's a dampening effect that happens when these assets get bigger. So go through your different coins. And this is why it's also good to get some exposure. I got 2 micro caps yesterday. Now I put a smaller percentage in those, and if I'm okay with if I entirely lose that money, because when you have a coin that's under $20 million market cap or under 10 million, or especially under 5 million, they are lottery tickets. They haven't worked out all the bugs in their systems. So when we come over here and we look at market cap, coin market cap, now let's go to, Polygon. Okay, let's see. Now this one's going to have some big news coming out about it and a lot of positive narrative because there's some big technological advances that they're making. I didn't even realize, look, Matic is up 8%. But looking at this, so let's go to all. So the previous all-time high was up here at 270, 274-ish. Okay. Yeah. Now with the market cap, this one isn't as bad as Filecoin. It's fairly close. That one's looking good. So, and it's a very strong ecosystem, but we come down here, let's look at something that's older. Trying to find something from the last cycle. Aave's been around a lot. Now I do think I do think DeFi is going to get another run this cycle as traditional finance comes in, but the all-time high here was 598. Was it with market cap? Okay, this one's not looking too bad either. And again, DeFi is gonna have a big run this cycle, I believe, as traditional finance is entering Let's talk, let's consider that. Theta, let's see what Theta's like. Theta's been around for a minute. So okay, this looks high as hell. $13. So yeah, that's pretty good multiple there. Now, if we go to market cap, yeah, so 3 to 12. This one actually doesn't look too bad either. Let's scroll down. This is what you want to do. Sometimes it's tedious when you're doing these, okay, here, let's do Sandbox. I have no idea what the emission rate on this one has been. Let's see, price. This is a huge exponential growth here. So under $1, 60 cents, 60, 70 cents, and the previous all-time high was 7.6. So there's a huge gain there in terms of market cap. It's reduced quite a bit there. So you just want to do this and look at the balance of your portfolio. Get exposure in some risky things, but make sure along the way. If you are in, I got to say this, you really want to make money in this market. If you want to be that crypto millionaire, you have to have your strategy to take profits. And if you take those risky plays, which you kind of have to do in some capacities, but do it in a smart way with a healthy, balanced portfolio. And when you have a risky microcap coin or a meme coin, when it starts going to 100 or 200% and you've taken zero profit, you haven't rotated any of that capital in terms of take out your initial investment and let the rest ride. Put that initial investment back into Bitcoin or back into Ethereum or maybe into a new project that you want to do, because it gets to the point where you can use your crypto portfolio to fund the type of investments you want to do and the risks you want to take in this space. So you're not always pulling money out of the real world and going cash poor to invest in this space. Have smart portfolio allocations, have a strategy to take profits, and have a time horizon for which you're going to be exiting the market based on these market cycles, because there's always going to be a bullish cycle and there's always going to be a bearish cycle. So make sure you set yourself up for success with that. And with that, everybody, I love you all. I hope you learned something today. I hope I reinforced something maybe if you needed to hear it again, and go back, watch through this video and make sure you just stay here with us in the community. Hit the like button. I really appreciate it if you do. Hit that subscribe button. Join us here. Positive, empowering space where I give you tools. I give you resources. I didn't do much TA on the price action today, and that's okay. We have a BitLab YouTube members thing that you can sign up for. The link is down below. I think Alexandra G will share it in the live chat. But you can also join just right below the video. It says join next to the title. Join us here. I'm going to be streaming the private premium Discord member stream into the for the BitLab YouTube members as well. I'm going to be doing basically TA on request today. We'll be back to the regular show tomorrow, just breaking down the markets and everything. But I wanted to make sure you guys have strategy. So I appreciate you, everybody. I'm grateful for each and every one of you. It's my birthday week. I'm turning 40, and I cannot believe that I'm so honored to have such a wonderful community in all of you. If you haven't yet, make sure you head over to my page right here at Kelly Kellum. Give me a follow. I appreciate it. And make sure you come and give BitLab Academy a follow right here at Academy BitLab. Share this with your friends. Let them know that there's tools that they can use. A lot of free ones that I shared in today's video. Yeah, I love you guys. The music that I had at the intro is from right here at Crypto Corey, right? So you can find him at RHODL Corey, actually, is where you can find him. So big shout out to him. I love you guys. I appreciate you guys. Let's absolutely dominate it in this market. Let's get out of our emotions in these charts. Let's get into our emotions with the people we know and love. The charts, emotionally agnostic. Let's look at the data. That's all I got. Adios, muchachos. Sorry about that. I would just wanted to say special shout out to the $10 super chat from Falco. Big love to you. I appreciate you. And Crypto Crank, 100K portfolio based on today's prices. Let me have it. Hey, man. Balanced portfolio. The only thing I would change on this one for a 100K portfolio is adding Bitcoin into this, a good portion, and taking. I would probably remove a few of the smaller coins, and ride that up to the up and to the right. Now I love you guys. I appreciate you again. Thank you for the super chats. Yeah, I love you guys. I'll see you guys in the Discord. Adios.